Good afternoon. Welcome back. This is part 2. I was live earlier on in the morning, and we entered a sell trade of EU, which we ended up closing at break even just because of time. But on our demo account, we are holding just to see where it's at, and it's currently around break even also. So the idea was originally, I think we're going a little bit late, but it was originally something like this. And we were targeting a 1 to 10 over here. So whatever 1 to 10 was about here. What was our entry? Three, 4, 2, 9, 8. Here anyway, and then there's a 1 to 10, so most of us would have been around here. This is what the trade we was in, and it ended up reversing back here towards this zone we drew. We entered more on our demo account, closed at break even the original trade, which is this one, as we can see here. My thinking was there was an wait, it's been a different time frame. Hold on. Yes, it was this time frame. So we drew the order block covering this, and if we traded above the halfway point, I wanted to close. Should have waited, but it's fine. And we created equal lows over here. This gray or green? Doesn't look like green. Anyway, you see here we had the sweep of these equal highs over here. Then we displaced or distributed a little bit downwards. Took us some swing lows over here. Retraced back into this fair value gap twice. I don't really like having fair value gaps twice being tested. But here it looked good, so we re-entered on the demo account, and then I just about made it to this low here. We were targeting the low of the daily fair value gap, or the high of the bullish daily fair value gap. We're currently in this red maroon lines are the lines of a bearish fair value gap in the daily time frame. I could just show you actually. Here's the bearishness. We're currently around about the halfway point. This is the large bullish one that caused this push upwards, and then this is the target down here that we have. So the reason why we close as well is because of time. You can see here that we have midnight open, sure, but 8:30 we now officially have the market open. So I am expecting Judah swings, which will be hunting of liquidity on the left hand side. Let's have a look at the hourly time frame. On the hourly, I'm not really seeing much. Let's check the 15. I think the 15 is a little bit of the same kind of vibe. Not really seeing much. Price is somewhat consolidating. There is no news actually yet. There's no news. So for the next hour, I'm expecting price to kind of look for liquidity. So that's GU. I'm not really seeing anything clear. This is EU, which is actually kind of got a different bias. So here we're actually bearish because we're in this bearish fair value gap range here. We also have a clear target that hasn't been touched yet, and it is of course bearish. But this fact that we've taken out this swing low, and this SMT divergence based on the fact that this created a lower high, this created a higher high, and did the same kind of movement. But EU is as well probably bearish. But the only caveat to EU is that we've already filled about 60% of the fair value gap, which is the bullish fair value gap here. This is a bullish 1 hourly fair value gap, which we've filled completely. And we have midnight open over here, and now we can mark out the market open. Right here. So from the midnight open, we had the sweep of these highs over here, and we've pretty much just been moving downwards quite cleanly when you look at the swings. Market open, we are expecting, I guess, the taking of a bullish. Oops. I'll be expecting the taking of a bullish or buy side liquidity. So that'll be these highs over here. Let me get an indicator really quickly. What was this? This is not the model. I don't know who made that, but I don't think that's the model at all. That. This. This isn't that bad, but let me have a look at DXY real quick. DXY. Okay, so bro, it's just been consolidating this disgusting range. It's not really clear, really. All right, let's have a look at some other pairs. So let's see, just give me this. 1, 2. 1, 2, 1, 2. I don't know if this is okay. We're back. Because I'm looking at GA. So this is my thought pattern. So I had to remind myself a bit. So that's why I was silent. I was just analyzing. So we have this bearish fair value, bearish fair value gap here, bullish fair value gap here. We're closer to the bullish fair value gap. We have been bearish for a while, creating these lower lows and lower highs and whatnot. So overall, we are bearish, right? In the recent times, we've been quite bullish, pulling back. You then draw, right, this kind of, okay, so look at the numbers, right? We're in a premium because we're above equilibrium, which is this gray line here. We're at or in between 705 and 79, which is the optimal trade entry for sales if we are using this leg as the kind of bias. We have wicked 1, 2, 3 times, and let me go here. Failed to create a high over here. Took out, should I say, swept equal highs over there. We then also have equal lows over here, which is the target. We then have from this range to this range rather from this range to this range, which is the fair value gap, we have the order block that's sitting here, which is basically covering that whole green thing. So if we're entering at the touch of the order block, then a stop loss just above it, and a couple of pips, and then when you zoom in on the order block I'm using as reference, this is using optimal trade entry from 6.2 to 7.9, and then the 7.05 is the midpoint. You can see this blue line is order block. Why? Because the 1, 2, 3 fair value gap following the order block was a market structure shift, or rather a fair value gap taking off these lows. That classify this as order block. We came very close to here, pretty much touched the very, very much bottom, right? And then we dropped to that black line, which is probably even where we could even re-enter on that touch again. And then that is literally right at that optimal trade entry, which we drew from the fair value gaps high to the fair value gaps low. We then also utilize the equilibrium, whether or not we're in a premium from this high to this extreme. You can see halfway point we are here, and then of course the optimal trade entry 7.05 lines up with the order block. So there is that. So that's kind of why I'll be kind of bearish, more so than anything. This would be a huge part of the accumulation, then go to the downside. I think more sensible TP for today, which would be probably here for these equal lows. So you know, small time frame, these equal lows would be more reasonable, but price could make it to the fair value gap for sure. It's about 1 to 17 type of trade. Remember, the market opened here. The Judas swing is what we're expecting. The main concern is always going to be concerned is when we're looking at this from a bullish lens, we have the fact that GBP AUD tends to be a pair that will move Asia ex London. And in terms of bullish ideas, we have been on the daily time frame rating more bullish candles than bearish candles in recent days. Obviously, the bullish candles could be all part of the reversal or retracement. At the same time, can ignore the fact. I would have preferred for price to be reversing rather than at this fair value gap, but at this fair value gap here. Nevertheless, this is the idea that we have. Again, over here, GBP NZD has been bullish for the day. So this is the equilibrium. We are at that kind of optimal trade entry, which lines up with the order block right here. So touching this, I believe it's that line. Touching the low of the fair value gap right here with the maroon and green will be the optimal place to enter a sell. If you look at the range from this to this extreme, from this extreme to this extreme, you can see that we took out some sell sides. And if we zoom in, that's the 4 hourly. You can see here we took out swing lows. We're currently retracing. And within this, we have a couple of things that could happen. From this leg to this leg, you're at the optimal trade entry, which lines up with this fair value gap. Use a box because it's so many lines. It's this fair value gap right here, which price came to again to then create the lower low, taking out this liquidity within this fair value gap to then push up. So if it trades above here, we might be bullish, but we also have an order block there. We have an order block. Not really want, to be fair. Technically, this whole thing could be an order block right here from the 6.2 line. The only thing that would mean that is that you would have to enter stop loss. Quite chunky. And time great. Look at the market open. Looking for some liquidity. It's not the cleanest. I'm just gonna stick with GA. A bit tough to find a pair that's not DXY related and also going to be heavily traded in terms of volume during the New York session. And it is a Friday as well, so that doesn't help much either. GU moving as expected to the upside. Not necessarily bullish. Here, running up a little bit. Let's have a look at DXY again. Yep, just in that range. There's a clean idea right here. And into this trade right now. Why did I enter? Well, minute open, we swept this liquidity downwards, pushed up, right up to the area of this fair value gap. From this fair value gap, we've pushed down here, taking all this liquidity, having a lot of minor kind of market structure shift to the downside. We trace all the way up here. From the market open, we ride it up, taking out these equal highs. And of course, it being order block is the main reason. With this touch to then push to the downside. In truth, I do think it was going to rally up more before it comes back down, but just a small amount, enough to be in if the market was to retaliate now from this leg to this leg. Though it's not really that good of a trade, to be fair. There really isn't much, I'll be so real. like a liquidity sweep than it is a because even though this looks like it took out some swing lows, look at the time it happened at near the midnight open. The liquidity sweep rather than a change in market direction. Hour closes in like a minute, so let's see what the hourly looks like on multiple pairs, and then we can make a decision if we want to keep streaming or looking for entries. But right now, I'm not really seeing much. Okay, so on the mark open, it looks like we're taking out this liquidity up here. It's been accumulating. So there is like a little bit of a range from here to here. Swept, equal lows, swept. This could be a start of a big move, but who knows the direction? Price is pretty much the same as it was a week ago. This whole week has just been like this by the doji. I do think price is gearing up for a sell. I mean, dollars is gearing up for a sell. I'm not gonna lie, I really do. How's this move in relationship to DXY? Let me see this real quick. They classified that as the market shift. What's I gonna do? DXY. Let's compare lows, I think. The moves in tandem. Bro, not all the time to be fair. From here up, it went inverse, copied. The plottings on this. Sometimes it moves in tandem, sometimes it doesn't. Right. Okay, I'm gonna be off. I mean, I think USD is going down. That's my main verdict right now. Don't really have much else. I don't really see any clean opportunities. Nothing I'll really like, oh yes, enter this on my live account comfortably. We are technically in this. That's about it. Main takeaway is definitely, yep, DXY being bearish. Looks like, I mean, to be fair, there's not enough information. There's two candlesticks, but it's my gut feeling. Okay, I'm gonna be ending. We need to take sell side liquidity before we move. Yeah, I'm gonna end the stream. I don't see anything. All right, see you guys next week. Peace.